What if I told you that two of the most dominant forces in the modern economy are currently on sale, giving you a golden opportunity to build serious long-term wealth? These companies aren't just riding the digital revolution, they're leading it, shaping how we shop, sell, and connect online. Let's break down their business models, growth potential, and why I believe they're poised for massive gains. Get ready, this could change the way you look at your portfolio. Hit the like button, let's get 1,000 likes on this one, share the video and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. First up, let's talk about a true game changer in e-commerce, Shopify, ticker symbol SHOP. If you've ever bought something from a small business online, there's a good chance Shopify was powering that transaction behind the scenes. This company has quietly become the backbone of digital retail, enabling millions of entrepreneurs to turn their ideas into thriving businesses. Shopify is the essential toolkit for millions of entrepreneurs worldwide. Whether you're a solo creator selling handmade goods, or a fast-growing brand shipping thousands of orders a day, Shopify gives you the tools to compete with the biggest names in retail. It's the platform that levels the playing field, making it possible for anyone, anywhere to launch a business and reach customers globally. It's the ultimate operating system for retail, helping anyone launch, manage, and grow an online business with ease. From inventory management to payment processing, marketing, and analytics, Shopify handles the heavy lifting so entrepreneurs can focus on what they do best, building their brand and serving their customers. Unlike Amazon, Shopify empowers sellers to build their own brands and customer relationships, not just compete in a crowded marketplace. Merchants own their customer data, control their storefronts, and can create unique experiences that set them apart. This is a huge differentiator. Shopify isn't just a marketplace, it's a platform for independence and creativity. Major brands like Mattel, Skims, and MrBeast use Shopify for direct-to-consumer sales, proving its scalability. These aren't just small businesses, these are household names and internet icons who trust Shopify to handle massive sales volumes, flash sales, and global launches. The fact that such diverse and high-profile brands choose Shopify speaks volumes about its reliability and flexibility. Shopify isn't just a website builder, it's a full commerce platform that grows with businesses from their first sale to their billionth. The platform's modular design means you can start simple and add features as you scale, from advanced analytics to international shipping and multi-channel sales. It's a one-stop shop for all things commerce, and it's constantly evolving to meet the needs of modern entrepreneurs. This creates a sticky ecosystem with high switching costs. Once you're in, you're likely to stay. Merchants invest time and resources into building their stores, integrating apps, and customizing their workflows. The more successful they become, the more valuable Shopify's platform is to them, making it hard to leave. This stickiness is a powerful driver of recurring revenue and long-term growth. Let's look at the numbers. In Q1 2024, Shopify's revenue jumped 23% year over year. That's not just impressive growth for a company of this size, it's a sign that e-commerce is still booming, and Shopify is capturing more of that growth than almost anyone else. The company's ability to consistently deliver double-digit growth is a testament to its product, its leadership, and its massive market opportunity. Subscription solutions revenue surged 34%, with more merchants upgrading to higher-tier plans like Shopify Plus. As businesses grow, they need more advanced features, and Shopify is there to provide them at a higher price point. This land and expand model means Shopify's revenue grows not just by adding new merchants but by helping existing ones succeed and scale. Merchant solutions revenue, including payment processing and shipping, grew 20%. Every time a merchant makes a sale, Shopify takes a small cut through its payment and shipping services. As transaction volumes rise, so does Shopify's share of the pie. This creates a powerful flywheel effect. More merchants, more sales, more revenue. Gross merchandise volume hit $55 billion in just 3 months. That's the total value of goods sold through Shopify stores in a single quarter, an absolutely staggering number that puts Shopify in the same league as the world's largest retailers. And remember, this is just the beginning. E-commerce penetration is still growing worldwide. Shopify's success is tied directly to the success of its merchants, a true win-win. When merchants thrive, Shopify thrives. This alignment of incentives is rare in tech, and it's a big reason why Shopify has built such a loyal customer base. For years, critics said Shopify was growing fast but burning cash. The company invested heavily in growth, sometimes at the expense of profitability, and skeptics wondered if the business model would ever deliver real returns for shareholders. That's changed. After selling its logistics business, Shopify is now leaner, more efficient, and profitable. The company has refocused on its core strengths, software, payments, and merchant services, while shedding lower-margin, capital-intensive operations. This strategic pivot has transformed Shopify into a cash-generating machine. In Q1 2024, they generated $232 million in free cash flow. That's real money, not just accounting profits. Free cash flow gives Shopify the flexibility to invest in new products, expand internationally, and return value to shareholders, all without relying on outside funding. This means Shopify can fund its own growth without diluting shareholders or taking on debt. In a world where many tech companies are still burning cash, Shopify stands out as a model of financial discipline and sustainability. The market hasn't fully priced in this pivot to profitability. Despite the company's strong fundamentals, the stock has pulled back, creating a rare opportunity for long-term investors. Sometimes Wall Street is slow to recognize when a company's story has changed for the better. Shopify is now a cash-generating machine with a massive runway for growth. With a proven business model, a sticky customer base, and a global brand, Shopify is positioned to capture an even larger share of the e-commerce market in the years ahead. The global e-commerce market is worth trillions, and Shopify's market share is still small. Huge opportunity ahead. As more commerce moves online, Shopify's addressable market expands. The company is just scratching the surface of what's possible, especially as it pushes into new regions and verticals. Shopify Payments simplifies transactions and adds a major revenue stream. By owning the payment stack, Shopify not only makes life easier for merchants but also captures valuable data and additional margin on every sale. Shopify Capital offers loans to merchants, expanding their reach. This service helps businesses grow faster by providing the funding they need to invest in inventory, marketing, or new product lines, while also generating interest income for Shopify. The Shopify App Store creates a network effect. More developers mean more value for merchants, and vice versa. This ecosystem of third-party apps and integrations makes Shopify endlessly customizable, allowing merchants to tailor their stores to their exact needs. The Shop app helps consumers discover brands and track orders, driving more sales to merchants. It's a powerful tool for customer engagement, loyalty, and repeat purchases, further strengthening the Shopify ecosystem. International expansion is a big focus. Shopify is localizing for new markets across Europe, Asia, and Latin America. By adapting its platform to local languages, currencies, and regulations, Shopify is unlocking new growth opportunities and helping merchants reach customers around the world. Founder and CEO 𝗗𝗓𝗏 is a visionary leader who understands entrepreneurs because he was one. His story, building Shopify out of frustration with existing e-commerce tools, resonates with the company's mission to make commerce better for everyone. Founder-led companies with clear missions have a huge edge. 𝗗𝗓𝗏's long-term vision and commitment to empowering entrepreneurs set Shopify apart from competitors run by hired executives focused on short-term gains. Has Shopify's story changed with the recent stock pullback? Not at all. If anything, the fundamentals are stronger than ever, and the company is better positioned for the future. Fundamentals are stronger than ever. Profitability, free cash flow, and impressive growth. Shopify is firing on all cylinders, and the numbers back it up. This pullback is a gift, a chance to buy a foundational e-commerce company at a discount. Opportunities like this don't come around often, especially for a business with Shopify's track record and potential. Shopify empowers entrepreneurship everywhere. Many of the coolest new brands you see online are powered by Shopify. From fashion to food, tech gadgets to art, Shopify is the engine behind the next generation of global brands. Shopify continues to make waves in the e-commerce space with a market cap of $184.42 billion. The company reported earnings per share of $1.81, with a price-to-earnings ratio of 78.51. In 2024, revenues reached $8.88 billion, translating to a net income of $2.02 billion. The second quarter earnings report was a standout, showing 31% revenue growth that exceeded analyst expectations and reinforced investor confidence. Free cash flow margins came in at 16%, underscoring Shopify's ability to generate strong cash returns alongside its growth. Subscription solutions also saw a 16.5% increase during the quarter, pointing to strong adoption of higher-priced plans and a strengthening revenue outlook. Analysts have responded to this momentum by raising price targets, with some suggesting Shopify could reach as high as $200 over the long term. The combination of robust earnings, rising subscription revenues, and bullish analyst sentiment has fueled optimism around the stock. Still, with its high valuation and intense competition in the e-commerce landscape, investors will need to keep a close watch. This is a long-term compounder, and today's valuation is a fantastic entry point for patient investors. If you believe in the future of e-commerce, it's hard to find a better way to play the trend than Shopify. To recap, visionary founder, massive market, sticky product, accelerating profitability, and a stock trading below intrinsic value. Shopify checks every box for a high-quality, high-upside investment. For me, Shopify is a no-brainer. It's rare to find a company with this combination of growth, profitability, and mission-driven leadership. It's a super growth stock I'm buying more of right now. I see Shopify as a core holding for the next decade and beyond. In 5 to 10 years, we'll look back at today's prices and wish we'd bought even more. Don't sleep on Shopify. This is a generational opportunity to invest in the infrastructure of global commerce. Now, let's shift our focus to the undisputed titan of e-commerce and cloud computing, Amazon, ticker symbol AMZN. This is a company that has fundamentally reshaped the way the world shops, works, and even thinks about technology. From its humble beginnings as an online bookstore in the 1990s, Amazon has grown into a global powerhouse, touching nearly every aspect of our digital lives. It's easy to look at Amazon's massive size and think its best growth days are behind it. After all, how much bigger can a company that already dominates online retail and cloud computing really get? But that's a mistake. Amazon is not just resting on its laurels, it's actively reinventing itself and finding new ways to grow, even as it sits atop the tech world. Amazon is just getting started on two massive growth waves: advertising and artificial intelligence. These aren't just side projects, they're quickly becoming core pillars of Amazon's business, with the potential to drive growth for years, if not decades to come. Its e-commerce platform is a marvel of logistics and scale, a finely tuned machine that delivers millions of packages every day. Amazon Prime, with its fast shipping and exclusive perks, has created unmatched customer loyalty. Prime members shop more often and spend more, making Amazon the default destination for online shopping in much of the world. But the real profit engine, the part of Amazon that quietly powers much of the internet, is Amazon Web Services, or AWS. AWS is the undisputed leader in cloud computing, providing the backbone for everything from tiny startups to global giants like Netflix, Disney, and even government agencies. It's a high-margin business that essentially prints cash, and it's the envy of the tech world. In Q1 2024, AWS revenue grew 17% to over $25 billion, and operating income soared an astonishing 84% to $9.4 billion. To put that in perspective, AWS alone generates more profit than most S&P 500 companies make in total revenue. This is a business within a business, and it's still growing at a rapid clip. The cash AWS generates doesn't just sit idle. It funds Amazon's relentless expansion into new areas: retail, logistics, entertainment, and most importantly, artificial intelligence. The AI revolution is built on data and computing power, and Amazon has both in spades. Its warehouses are filled with robots, its servers hum with machine learning models, and its data centers are among the most advanced in the world. AWS is perfectly positioned to win big as companies of all sizes turn to it for AI infrastructure. Amazon is investing billions in custom AI chips, designed to make machine learning faster and more cost-effective. This gives Amazon a crucial edge in both performance and pricing, allowing it to attract the next generation of AI startups and established enterprises alike. But Amazon isn't just reselling AI tools, it's innovating at the very core. The company is integrating artificial intelligence across all its businesses, from improving search results and personalizing recommendations to optimizing logistics and supply chains. AI helps Amazon predict what you'll want to buy next, route packages more efficiently, and even automate customer service. Take Rufus, Amazon's new AI shopping assistant. Rufus uses advanced language models to help customers find exactly what they're looking for, answer questions, and make smarter purchase decisions. It's like having a personal shopper in your pocket, available 24/7, and it's just one example of how Amazon is using AI to enhance the customer experience. The second major growth engine, advertising. Amazon has quietly built the third largest digital ad business in the world, trailing only Google and Meta. Its ad platform is now a must-use for brands that want to reach shoppers at the moment they're ready to buy. What makes Amazon's ad space so valuable is intent. People come to Amazon not just to browse but to buy. That means brands can directly link their ad spend to actual sales, making Amazon's platform incredibly attractive for advertisers. The data and insights Amazon provides are unmatched, allowing brands to fine-tune their campaigns for maximum impact. In Q1 2024, Amazon's ad revenue grew 24% to nearly $12 billion, a high-margin, fast-growing stream that's only getting bigger. And now Amazon is adding ads to Prime Video, opening up yet another massive revenue source. This move alone could add billions in high-margin revenue over the next few years, as advertisers clamor to reach Prime's huge audience. Beyond its core businesses, Amazon is also expanding into new frontiers. Smart home devices with Alexa, grocery delivery with Amazon Fresh, and digital content through Prime Video, music, and Kindle. Each of these areas has the potential to become a billion-dollar business in its own right, further diversifying Amazon's revenue streams and deepening its relationship with customers. So, you have three engines: dominant e-commerce, AWS at the heart of the AI boom, and a surging ad business. But the story doesn't end there. Amazon's relentless innovation means it's always looking for the next big thing, whether that's healthcare, logistics, or even satellite internet with Project Kuiper. Each of these businesses would be a great company on its own. Together, they're unstoppable. Despite its size, Amazon stock is still reasonably priced for its growth prospects. The company's ability to generate cash, invest in new opportunities, and disrupt entire industries is unmatched. CEO Andy Jassy, who took the reins from Jeff Bezos, is laser-focused on efficiency and profitability. He's cut costs, streamlined operations, and doubled down on high-growth areas like AWS and AI. The result? Free cash flow has exploded, over $50 billion in the past year alone, giving Amazon the firepower to invest in the future. Amazon is using that cash to invest in the next generation of technology and to buy back its own stock, directly benefiting shareholders. The market still underestimates the combined power of AWS, AI, and advertising, and the optionality Amazon has to enter new markets at scale. Amazon maintains its dominance with a massive market cap of $2.43 trillion. The company posted earnings per share of $6.70, a price-to-earnings ratio of 34.16, and in 2024 generated an incredible $637.96 billion in revenue with a net income of $59.25 billion. That translates to a profit margin of 10.76% and a return on equity of 20.72%, reflecting both efficiency and effective management. Recent developments have only added to Amazon's momentum. The company has invested over $160 million to acquire a major movie license, signaling its commitment to building out its entertainment portfolio. Analysts remain highly supportive, with Wells Fargo calling Amazon a tactical winner, especially with the potential for interest rate cuts in the months ahead. JP Morgan has reaffirmed Amazon as one of its best ideas for investors, pointing to the company's growing dominance in e-commerce, where its market share now approaches 50%. Overall, both Shopify and Amazon are showcasing strong growth trajectories, though in different ways. Shopify is riding high on subscription expansion and analyst upgrades, while Amazon is leveraging scale, diversification, and strategic investments to cement its leadership. Together, they highlight the strength and evolving dynamics of the e-commerce and digital retail markets. Many see the big market cap and assume growth is over, but the numbers say otherwise. AWS's growth signals a massive wave of AI-driven spending, and Amazon is set to capture a huge slice. The company's ability to adapt and innovate means it's always one step ahead of the competition. Investing in Amazon means owning a piece of the internet's backbone, and a leader in AI. It's a company with multiple massive growth levers just beginning to pull. As the world becomes more digital, Amazon's role will only grow more central. For me, Amazon is a core holding, a stock to buy and hold for the next decade, if not longer. The compounding potential is immense, and the company's track record of innovation and execution is second to none. This is a super growth stock that continues to defy expectations, a must-own for any serious long-term investor. With its unmatched scale, relentless innovation, and multiple engines of growth, Amazon is poised to shape the future of technology, commerce, and beyond. So there you have it. Shopify and Amazon. Two powerhouses that are not just shaping the present, but also defining the future of commerce and technology. Both companies have revolutionized the way we shop, sell, and interact with the digital marketplace, and their influence continues to grow with each passing year. Whether you're an entrepreneur, an investor, or simply a curious observer, it's impossible to ignore the impact these giants have had on the global economy. Both are showing strong growth, rising profitability, and in my view are trading at attractive prices for long-term investors. Their financials are robust, their innovation pipelines are active, and their leadership teams are focused on sustainable expansion. If you're looking for companies with a proven track record and exciting prospects, these two are definitely worth your attention. If you want to level up your investing skills and gain a deeper understanding of how to spot value in the stock market, check out my Value Stocks Investing Master Course, link in the description. This course is designed to help you build confidence, make smarter decisions, and ultimately grow your wealth over time. For exclusive stock tips, in-depth analysis, and direct access to a community of like-minded investors, join the Stocks Galore Patreon community. You'll get early access to my research, detailed breakdowns of market trends, and the chance to connect with others who are passionate about investing. Now I want to hear from you. Which stock are you more bullish on for the next 5 years, Shopify or Amazon? Are you leaning toward the e-commerce disruptor or the global marketplace titan? Share your thoughts and your reasoning in the comments below. Let me know in the comments, and don't forget to subscribe for more insights, analysis, and investing tips every week.